recording. So I think in that regard, I've seen quite a few use cases, as I mentioned, that are not actually core to the mining processes themselves, but are relevant to industry. Say, training certificates in countries where the mobility of employees is huge, the churn is huge, and they change back and forth between multiple mining companies. Usually they have to be retrained within 12 months or 24 months. And if they move companies, they have to redo the training, even if it's earlier than that. And that is an added cost. And when you have a lot of churn in those types of industries, what you have is, okay, so you have an additional cost of operating with those professionals that you wouldn't have if you tracked this at the industry level. So this is what I think highlights the possibility of having and as Hugh mentioned about the, in the past ERPs and whatnots about being the golden source of truth in the companies, what we're going to see with blockchain is the shared source of truth in industries. And that is going to make for a much more efficient type of industry. So this is one aspect, because this is a very technical, very engineering oriented industry. And we're seeing these types of use cases that are sort of accessories to those, but are also big chunks of efficiencies that if you don't need to, retrain people all the time, you can use that money for other stuff. And it's also a very capital heavy industry. So that also lends itself to more efficient use of capital itself in general, across the board. I think it is an industry that's been pressured for ESG practices. And as Stephanie was mentioning, well, if this steel is better sourced or better produced in ESG terms, and I can prove that, then I can not only benefit the world because this is like a greener metal, but I also can add a premium to my production and make it more profitable. And being a commodity, any inch you can move in pricing is relevant to the overall, of course, industry, but also the company. So that is, I think, one other aspect I've seen in this industry being pursued, which of course then moves to the next one, which is how do I ensure that the region where I'm operating as a mining company is safe and sound, not only for my practice, but also for the local population. And you can do that not only with blockchain, of course, but you can add IoT and artificial intelligence to prevent any of the other mishaps from the operation that certainly occur, but you can then certify and report into the blockchain so that is visible and transparent across your supply chain. So these are a few of the use cases, but I think there is a genuine interest in the mining industry of adopting blockchain for a number of use cases. And I think this panel is proof of it, because there's a number of companies that are dedicated to this in different capacities, which is amazing. And I think we'll see more and more. And as you said, and I'll echo that, I think it lends itself to starting easier. So like simplicity wins. We're seeing, even in the crypto space, we're seeing companies that are crypto-based, like heavily cryptographic, now integrating themselves with different digital wallets that have amazing user experience. So ergonomy is also something that will allow for everyone, every layman to understand and use what blockchain is and benefit from it. Otherwise, it's just like, this is an infrastructure technology. If we get a layer of usability, then adoption will blossom, I think. So that's my 2 cents.
Great, thank you. I will actually ask the question that Hugh suggested, and I just want to hear everybody's thoughts on that. What will make blockchain technology like a real pillar of the organization's work? So right now, some people are dabbling a little bit, and if it's gone, the work will continue, you know, as before on PDFs and Excel spreadsheets and whatnot, you know, and stamps on the documents. Okay, none of us on this panel believe that this is what's going to happen, but the question is, what will it make to do this big push when everybody will start like really using it as their main work process? How will that happen? What do you think? In which order I'm going to ask? I'm not going to ask Hugh this question because he's the one that asked it. But yeah, just in order. How about Loudon? What do you think?
I'll answer last.
Oh, you go. Okay, okay. Okay. How about Loudon? What do you think? Do you have any opinion on that?
Tanya, you don't know me if you ask me if I have an opinion on pretty well anything, but the answer is yes. The single most important element here at the enterprise level is value. And if value is conferred, then the technology will expand dramatically. This is not about technology, it's about enabling enhancement and improvement. The technology in and of itself is irrelevant. It's simply a conduit. And I think that the hesitation in larger enterprises has been, the industry is indeed full of a lot of theory, a lot of interesting discussions, a lot of PowerPoints and press releases. And that's both confusing and also immaterial. We work with many very large enterprises globally, including the automotive sector, aerospace, and others. And what they want to know is demonstrate the value, work with legacy systems, don't impose massive change management requirements, and do you have the capacity to deliver and support? So you have to have scale. And I think that we consider we're growing at a pretty quick pace, but with 400 people, I consider us still to be very, very small. To be able to continue to deliver the support that's required, because testing and moving a few documents around and tracking and tracing is pretty de minimis, frankly, and a lot of people can do it and do it very well. What is not easy is having 24/7, 365 uptime, managing the network itself, ensuring that you have the capacity either directly or through partners, which is the way we're operating now with a lot of larger firms, to have all of the various elements, whether it's the configuration required, there's always a degree of specificity, the onboarding, whatever integration work is required, and of course, managed services in the operation. So what's required is value creation. It's got to be tangible. I haven't yet seen a company interested in using blockchain in production unless there's a very simple value model, and it's got to be clear and it's got to be tangible, because there's an allocation of resources. Now, what we're finding is it's got to be driven by the business line owners, very rarely by the technologists themselves. So the business unit owners, they have obligations, and I'm talking large scale. I'm not talking the sort of small, innovative, company with a few hundred people. And they have to meet and exceed those standards. So it's an investment of time, energy. It's a reputational investment, and you need to have growth in organizations that can actually support it. So that's been our philosophy. So as we extend to a couple of thousand people quickly, it's being able to meet those obligations and those objectives.
Excellent. Thank you very much. And Michelle, you are our industry representative here. In your opinion, what do you think will make blockchain this staple of the technology?
So yeah, look, I agree absolutely with what Loudon said, that number one is around value, is having use cases that drive significant value, and in that sense, getting out of a series of proof of concepts and actually building some scale around those use cases, I think is absolutely number one, because when you've got value, when you've got tangible value and you can articulate that, that gets people interested. So I think absolutely that is number one. I think the second big thing is around trust, and I think this is one area where I think we need to do some more work as an industry, trying to drive value and trying to solve problems for other industries effectively, because I think there's still concern around trust, elements of trust, and I think Loudon alluded to a couple of them in terms of, are we of sufficient scale and capability to resolve issues, to provide service, to be, there to support the mining industry and its needs? And I know that's tough because in many cases we're small organisations. And mining is a bit notorious for being able to, when they see value, to be able to really, want those services or want those products, faster or greater than sometimes they can be provided. But I think there's this issue around trust, which is not only around scale and capability, but I think the other component of trust is about this issue around the white economy versus the black economy. And, so one of the comments, I speak to boards quite often about blockchain and about the sorts of use cases that they can look at and the sorts of value that they can get from some of those use cases. And there's still a trust issue around using blockchain technology that is associated with the fact that there are still organisations that are using, especially cryptocurrency, so the crypto side of our industry, for criminal activities, and then therefore that association is still of a concern for a number of boards. So I think, we need to think as an industry, not only how we articulate that to mining companies and to other companies, but also how we, think about bringing and having those use cases that stamp us clearly in the wide economy, and eradicate some of those thoughts. And then the other component I think that is more challenging for us is so I think Loudon again has raised this issue that often organisations want small changes that are palatable, that are bite-sized, that don't make them have to do a whole series of change management activities. But on the other hand, some of what we're talking about with blockchain is quite disruptive. And so it's that dichotomy that I think we need to think about, and how do we make that dichotomy palatable? Because in many cases we are, disassociating the supply chains, or we are disintermediating supply chains, or we are quite fundamentally changing the way people think about contract settlement or traceability, or even how they think about their commodity and how their commodity is then transacted. So I think facing that dichotomy head on, and thinking about how do we simplify the message around that dichotomy, how do we simplify the behavioural change, and how do we create an alluring user experience, so that even for the most disruptive of changes, it makes it a relatively simple process, both intellectually, emotionally, and physically. That I think is actually the challenge that we haven't necessarily hit head on.
Yeah, no, I think definitely a very good point. If you offer somebody a revolution, they might not necessarily want it. It's worked so far. We don't want the revolution, but it's going to happen anyway. We all believe in that here on this panel anyway. I will ask one more question. The time is drawn on and I don't want to keep everybody forever, but I think that's an important one and that people often are concerned about is how do you in your application, so that's specifically for the companies that are already doing your blockchain for mining, how do you tackle the transparency versus privacy issue? So a few people volunteered to answer that. Okay, I think Mauricio agreed to answer that. So please, Mauricio, go ahead.
Thank you. I think there are many ways technically for you to achieve that. And I think one of the most elegant methods recently that I've seen in practice is the ZKP, the Zero Knowledge Protocol, which allows you to sort of browse the information without actually accessing the data that's on chain. And the reason why I think this is the most interesting at the moment is twofold. Because one, because it actually sort of delves into what knowledge is. That means you understand what's there without actually seeing the underlying data. So I think this resolves a lot of the transparency issue, and that is in the way that it resolves with cryptography is quite elegant. And the second thing is because in a way, ZKP or the zero knowledge proof allows also for you to remain compliant to most of the privacy regulations. So of course, we don't want to do personal identifiable information on the blockchain. It depends on the architecture, but that's not recommendable. But you can keep all your transactions compliant and all the underlying data compliant with, say, GDPR and HIPAA or the Brazilian LGPD, which has been of great concern in most industries. I'm not familiar with how deep this has been embedded into the mining industry itself, but because it crosses multiple industries and most of the processes are cross-industry, this is an implication in and on itself. So I think the most elegant solutions that I've seen work are now either using or assessing the use of ZKP as part of balancing transparency and privacy altogether.
Thank you very much. And Nathan, can you please comment on transparency versus privacy thing?
Like most parts of blockchain, I always find it helpful to narrow down to sort of the use case, what we're talking about, because when we talk about sort of data in general, how much should be private, how much should be public, there's not a good answer to that because there's obviously points of contention. There's going to be different use cases for the data. Things like compliance and ESG reports, right? So that's an important one. Compliance ESG reports, that's where we would hope to err on the side of transparency and to make it visible to more people down the supply chain. Things such as connectivity, like who is the customer of who and who is the supplier of who, that's something where we would err more on the side of privacy, because obviously people are quite concerned about that. Although what we have seen in the past couple of years is a shift in that middle of the supply chain with traders who have historically been very guarded about who their suppliers are, to realizing that they have more to add in their value proposition than just sort of secrecy. Oh, you don't know who my suppliers are, so I can make money. It's no, we add value through trading and handling and documentation and getting things across borders. So as that realization sets in the mid-chain in the industry, we're going to see people being more open to sharing data. How the blockchain should handle that, as long as, from my point of view, as long as there's support on a technology level for dividing data up into different layers of visibility, then it should be fine, because then it's the use case that determines who should see what. So if someone is creating a supply, like a provenance chain, then that different players participate in, then that will be different data that goes to different visibility than, for example, a carbon emissions chain or a payment processor. And each one of the use cases will have different criteria for who should see what. But I think what's most important for us as service providers is to make sure that all of those data visibility layers are adequately secured and supported, so that the solutions that get developed are more fit for purpose.
Thank you. And Stephanie, next, please.
Oh, here we go. Yeah. So from Peerledger's perspective, privacy is a huge concern, obviously. And from a standards view, we are, ISO 27001 compliant. We do support GDPR. We also have a health solution that is HIPAA compliant. So we really make sure that we are meeting those types of standards and policies that are in place. But beyond that, the way we design our solution is so that companies can maintain the strictest control over their data. So we're hosted on a private blockchain, and companies have total control over, which supply chain partners can see data. We have implemented role-based access as well, so that, even internally, there's still a lot of control on the company's part as to who can see what data, who can conduct certain types of transactions, to add that added layer of privacy and security. Our team does consist of experts in cybersecurity, and that's one of the ways that we have strengthened our solution beyond what's available natively in blockchain.
Thank you. And Hugh?
Yeah, I think there's one more piece to add around there's privacy and transparency, which a certain amount is a choice. And Nathan, I think you're right. There's a lot that the industry needs to work out in terms of what is going to be shared downstream, like ESG data and carbon accounting and stuff. But there's also a very rigid base layer, which is around regulations. So we've done transactions with like BHP and Baowu and Vale and others, which are going in and out of China. Now, not only do we need to be careful about what data is shared and how, but actually where is it stored? And if it's a Chinese transaction or a transaction with a Chinese party, it needs to be stored physically in China, else we're breaking the regulations over there. And also it must have certain access for the right parties and the right authorities. If it's outside of China, it's completely different. So, we've gone through, we've got the, ISO 27001, we've got SOC 2 compliance for some of the major companies we're working with. But we've also gone and got ourselves the, I can't remember the name of it off the top of my head, but the information license to get information in and out of China and do that cross-border link. For the hosting there's a lot of complex rules which are very different when we deal with whether it's Brazil, whether it's Indonesia, whether it's other countries. There's this base layer where in a lot of cases, the requirements for transparency are opposing. And that's not just something we have to deal with and have the ability to deal with in the tech. Obviously, we implement what's asked of and what's legally required. But you find it's also something that's been dealt with in the industry itself. So if you're a major mining company selling into China, you probably have a Chinese subsidiary who actually sells into China. You don't do it yourself directly. And there's different models getting around that. But what you'll find is where you have these issues, you already have these almost awkward or different structures that have grown around that regulation in the supply chains themselves. And as technology providers, we just need to be able to comply with all of them, which is easier said than done, but it needs to be flexible.
Easier said than done, for sure. So I'm aware that the time now is 3 minutes past the end of our panel. I understand some people need to drop off, so I just want to thank those who have to drop off for participating. The recording will be available online in a little while once I kind of clean it up and edit it a little bit. I will make it in chunks, so it will not be all like 3 hours. So yeah, thank you very much for participating. Those who have to leave, I'll say goodbye. If people want to stay on, I'll stay on for now. We have only started on the long list of questions, but I think it was a very good discussion. And I think it's great to see us all talking about how to make it happen. So. All right, bye Loudon. Yes, I know you have to go.
Thanks, everybody.
Okay. Okay, so for those who, I still see we have the audience there, and maybe there will be some questions coming from the audience as well. We can carry on through the list of questions if people are okay with that. Are people okay with that? Yeah. Okay. Okay, so this is a question that I'm interested in hearing your opinion. Among the industry participants, mining industry participants, not just the mining companies, who are others who are kind of listening in and are more ready to use the blockchain technology? Is that investors? Is that the government? Is that NGOs? Or is that communities? What do you think? Who wants to say that? Anything? Go ahead, Hugh.
So I find from the sort of work that we're doing, we focused on the primary actors who are creating or processing the material. I say creating, I guess digging out the ground, but doing that physical work and movement. Everything else from their perspective is supporting actors. So if they need financing from a bank, the bank provides that service as a loan, but there's a series of banks they can go to. Same with assay labs. Things like ports are obviously more fixed, customs. But by focusing on that physical flow, what we found is talking to anyone else, it's a pretty generic answer, but it's always the same, is we're in if they ask us to. So if our client wants it, we'll join. Now, for some companies like an assay lab, it can be very simple. Yes, we'll upload it on the format they want, or actually we've got a system for this, but we could integrate it. That's quite convenient. Or you have the harder ones like a top tier bank. They've got to go through all the regulations, so they'll say, well, we'll come in, but not if a small client wants it, like if a bunch of clients or a major client wants it. But that all these supporting parties come in very easily based on the physical flows and transactions for us. It might be different for other people, I don't know.
I'm curious to ask a slightly different question, actually, from Arno. I haven't heard from Arno for a while. In terms of the legality of your operations, is that a major hurdle? How do you deal with that? Like legal registrations, permissions, all that. Just like Tanya. You mentioned that they had to get a permission to store information in China, outside of China, all that.
Yeah. So. Definitely regulation and legal limitations are much bigger once you speak about transferring value. Obviously, we have data regulations, but value is in a really regulated environment. If you talk about financial transactions or fiat, or even token representing securities or any other type of asset token. So that's a huge barrier. That's a huge barrier for at least the commodities industry to move on and to accelerate in the adoption of this. So we have huge cost items in regards to cross-border analysis. You obviously have different regulations and legislations classifying tokens in different ways. In addition to the barrier of adoption that I think we mentioned before, or Hugh mentioned before, and many people mentioned it, but the barrier of adoption of larger industrial enterprises wanting to join and apply this technology. So more and more we see larger enterprises looking really into the details. So they are setting up teams also from their legal side to investigate, and not just in their own country, but with which other countries they would be able to interact over such a distributed ledger. So there's progress, and there's obviously a positive feedback also from regulators to see that we want to move this, I would say, bilateral, rather private world of trades into a more sustainable, public, open source kind of transaction layer. So we will get there. It requires a lot of cost and investments. And that's maybe something I mentioned before, where I didn't want it to too much criticize certain protocols. My intention is to try to lower the adoption barrier of each corporation. And I think there is a cultural shift needed for many such industry initiatives where collaboration is much more needed to collaboratively be able to tackle certain adoption barriers, right? So if each organization would need to solve a privacy issue, a data issue, a legislation issue, a network maintenance issue, all those things that we have to deal with as a DLT company. If everyone is doing that in silos, we will end up with massive costs and don't really solve the issue and the value we want to bring to the industry. Right? We are not selling blockchain, we're selling a solution. And we have the cost of decentralization is so massive that sometimes I have the feeling we are looking at the wrong side of things. That's a bit my message. Yeah.
Okay. All right. I think we're like well over time now, so I very much appreciate everybody, sticking around. If there is anything, anybody like burning to discuss, please bring it up. And if everybody is ready to go, then thank you very much. I'm very, very grateful for you to be here with us. It's a great learning experience, definitely for me and hopefully for everybody. And thank you for adjusting to all the different timings. And yeah, I will hope to hear from you all soon, and let's continue, working together and make it happen.
Absolutely. Thank you, Tanya. Thank you, everybody. Bye.
Thank you, everybody.
Thanks, Tanya. Thanks, everyone.
Bye-bye.
Stay safe.
Okay. Hi, Nathan.
Hi, Tanya. Good event. Went really well.
We're still live, so thank you. Yes, no, it was great. Thanks a lot.
Bye
Thanks
for
for
now.
your time, and we'll speak soon.